Hey guys, this is Shariel, and you're watching Modest Millennial, where we talk about all things money that they don't teach you in school. This news just came out earlier on Thursday when President Biden said that he's proposing to increase the corporate tax rate on wealthy individuals. This plan involves increasing the capital gains tax to almost double of what it is now for wealthy individuals. The current tax rate on capital gains caps out at about 20%. With the new proposal, this would increase all the way up to 39.6% for individuals earning more than $1 million a year. Guys, this is insane. The increase in tax rate would mean that for states that have a higher tax rate, such as California and New York, wealthy people will end up paying as much as 57% in taxes on the income from their investments. Is this going to be a reality though? We don't know yet. It's uncertain at least until the proposal is introduced in the House of Representatives for approval. One thing we do know for sure though is that the like button does need some of your attention, guys. So go ahead and smash that like button and subscribe to my channel down below for more content on personal finance each week. And don't forget to check out my Robinhood link below to get your free stock today. Also, don't forget to let me know in the comment section what you think about the new Biden tax proposal. For sure, the new tax proposal is going to cause a lot of panic in the stock market, at least in the near term, until there is more clarity on certain things. We have all seen how the stock market has been rallying like there is no tomorrow ever since the first stimulus package was announced last year. Stock market is up by more than 40% now since bottoming in March 2020. The tax proposal that came out on Thursday is definitely going to shake the course of things for the market, as a lot of wealthy individuals will start adjusting their investments based on how much they can lower their tax burden by under new President Biden proposal. Would wealthy people be happy with this new tax proposal? Most likely not. Most wealthy individuals were getting by paying bare bones in taxes on their earnings from their investments and pocketing most of their profits rather than giving to the government. But here comes President Biden all of a sudden and is trying to level the playing field. Now, if you are a wealthy individual making more than $1 million on your investments each year, you are forced to rethink your strategy because in the past, when you were paying, say, $200,000 in taxes on your $1 million in profit each year, with the new President Biden plan, you will be required to pay upwards of $400,000 in taxes on your $1 million in capital gains. Now, for a smart investor, you would try to keep your profits below the 1 million mark so that you don't have to succumb to the new tax rate, because now that's going to get you the best bang for your buck. How do you do that? You go ahead and sell your investments. You sell your stocks, you sell your bonds well ahead of when you were first planning to sell them, and try to reduce your profits to fall under a lower tax bracket instead. A combined effect of you as a smart investor using this strategy, coupled with thousands of other wealthy investors out there in the same boat, starts selling, and the stock market starts correcting itself. It's kind of funny. After the pandemic economic shutdown and the stock market collapse last year, I was like, the worst that could happen to the market has happened. With the economic shutdown, the stock market tanked, but then it rose back up again, and it rose back up strongly. I kept thinking to myself over the past year, there is nothing else that could happen right now that will cause another bloodbath in the strong market. I was proven wrong this week by the introduction of this new tax proposal that's going to pull the rug from under a lot of wealthy people out there if it ever makes it into becoming a law. But this proposal is going to face an uphill battle in the House of Representatives and the Senate, where the Democrats don't have a majority. Steve Chevron, portfolio manager at Federated Hermes, was quoted as saying that President Biden's plan should be viewed as an aggressive negotiating tactic. It is that biggest, baddest, most progressive policies out there, but knowing deep within that they're not going to get what they ask for. This seems like one of those strategies where you are looking for a job and you try to negotiate a very high starting salary, but deep down you know that you're not going to get what you ask for. But at the same time, hey, it doesn't hurt to ask, right? At least you will get something out of it. There is a lot of unknown here, guys. More details on this proposal won't be released until next week, and until then, everything that is currently being discussed is mere speculation. Markets responded strongly when the news broke out on Thursday about the new tax proposal, and major indices were down about 1% by the end of the trading day. Would I call this a bloodbath? Probably not. That's just a course the market follows. It's up sometimes, it's down sometimes. Also, the market shot up by 1% on Friday, showing that investors are not too concerned about the tax proposal. I feel that a lot of investors out there were definitely taken aback by introduction of this new proposal, but decided not to press the panic sell button yet until details about the proposal were firmed up. Obviously, as more details emerge next week, it may so happen that a tax proposal turns out to be a light blow to certain wealthy individuals out there and doesn't affect the market in the very least. But there's still a 50% chance, guys, that the plan is in fact what we are thinking it is and starts a sell off in the market. The stock market is kind of on the edge of a sword right now and just waiting for a catalyst to start bringing it down. There is a lot of pressure surrounding the market because here's what happens: taxes go up, profits go down. When profits go down, the stock market goes down. And when the stock market goes down, well, we all know what happens then. We all lose money. Now, one of the major things that is unclear from the tax proposal news we heard on Thursday is the implementation date of the new tax rate. It is very likely that the tax rate won't be effective on earnings and income from 2021 tax year and probably will go into effect in 2022, which means that major investors, wealthy investors, are incentivized to sell in 2021 to cover their positions and bring taxable income down going into 2022 tax year. And guys, it's not just the stock market that is under pressure of the sell-off from President Biden's plan. We are also seeing massive selling pressure on the cryptocurrency market. Bitcoin at the time of recording this video was hovering right around $50,000. Because no matter how much you think Bitcoin and some other cryptocurrencies are unregulated, they still kind of are regulated in some fashion. The government recognizes your profits earned from crypto transactions as being capital gains, which under the new tax proposal will be considered as ordinary income and taxes you on your profits, same as it taxes your profits from the stock transactions. Now, hopefully, all of this potential selling that might happen in the next couple months may not be a bad thing after all. It definitely may create a buying opportunity for smaller investors like myself and many other people out there. When the stock market goes down and investors are being fearful, you need to be greedy and snap every opportunity that you can of buying more. Throughout the history of the stock market, we have seen it fall multiple times by 30 to 40% or sometimes even 50%. But what has gained some people a lot of wealth is holding cash for a while and then buying in when the stock market dips, just like I mentioned before. Basically, if the tax proposal passes and becomes a law, the stock market might present another such opportunity to invest a lump sum amount of cash and to just let it grow over time. The problem you might think though is that even if you invest in the market, if the tax proposal is approved, you may someday get charged a hefty amount of taxes on the returns from your investments. Here is my take on that. You should not fear the tax proposal. The thing is, if the taxes go up, they won't go up for just one or two people. Millions of individuals will be affected by this, and this will cause a deflationary cycle in the economy, in my opinion. Buying power will go down for most individuals as people will have less money on hand after paying taxes to the government. This will in turn decrease the demand for products in the market and lower the prices of raw materials for industries and finished products for consumers. But this will also give rise to a new financial cycle for the long run with less money in circulation, less demand, and thus less inflation increase year over year. So when we look back at this tax increase in 10 to 20 years from now, it may not look like such a bad thing after all. The one caveat I do have to what I feel about though is that I really hope that President Biden is planning to use the revenue from these tax increases to fund his $2 trillion infrastructure plan that was laid out a couple weeks ago, and uses the tax revenue to renew the infrastructure of the United States in a way that is beneficial to the economy in the long run. This means new jobs in the market, lower unemployment of course, provision for EVs to grow, better roads and bridges around the country so that they can be designed and built around requirements for autonomous driving, improving manufacturing in the United States so that more stuff is made in the USA and not overseas, and finally, better healthcare options. If the revenue from higher taxes is being purposed towards these things that I just mentioned, I will be very pleased to see our tax dollars being put towards a tangible use that benefits not just us but also our future generations. The things I don't want to see this tax money being diverted towards are mostly just current expenses that arise out of short-term vision from the government, such as reducing the national debt, for example. All the expenses, stimulus packages that the government has freely printed money for over the past year need to be paid for somehow. I would not want to pay higher taxes just so these short term expenses can be taken care of, and there is no direct positive impact on the well being of the economy and the people that are actually shelling more out of their pocket to pay for these things. Again, in the short term, if the higher tax proposal is approved, it will cause a lot of chaos amongst large institutional investors, and the stock market will see a bloodbath over the next few months. But that will also present a buying opportunity for long term investors like myself. And in the long run, I don't see a major impact from paying more taxes to the government. We will obviously find out more details as the proposal is presented in front of Congress next week, but until then, sit tight and don't make any reckless moves on your investments just yet. Like I said earlier, this might just be a big initial blow, but may not turn out to be that bad as more details emerge next week. And above all, I think it's going to be really hard to get this proposal approved in the Senate. Again, guys, all of these things are just my personal opinions and not investing advice in any form. If you need investing advice, go talk to your financial advisor. Alright, everyone, thanks again for watching. Really appreciate your support in growing this channel. So make sure to hit the like button and the subscribe button below. And don't forget to comment below what you think is going to happen with this tax situation over the next few months. And tune in again next week for more content on personal finance.